Thanks everybody for being here. Today we've got a lively quick chat here on core modernization and really bank modernization in general. And I'll sort of be the moderator here, but I'll introduce first Mike Haney, our main Galileo guy.
Hi everyone, I'm Mike Haney. I run product strategy at Galileo. Happy to have all of you with us today. Talk a bit about core banking platforms and core modernization strategies. And obviously we're joined by our wonderful partners, PWC, and I'll let them introduce themselves.
Sure. Hi everyone, Musi Qureshi, partner in our banking transformation practice at PWC. And sort of complementary to what Mike was saying, we spend a lot of time thinking about the broader transformation of a bank and how the core is a critical part of that, both that ecosystem and the journey and the modernization. So I'm excited to be here.
I'm John Craper. I'm partner at PWC as well. Work with Musi and the rest of our gang in core modernization and overall bank modernization as well. So really the journey of banks, both old and new, to becoming the modern bank, the bank of the future, and enabling technologies to support that. So I think, it probably starts us off with a good topic of, and might maybe kick us off, right? From a landscape perspective, like what are we seeing in the market? Like why? Why is Galileo even exist, right? But why is it a player? Why is it a conversation?
Well, clearly Galileo does more than just core banking, but one of our key product lines is our core banking platform, which we call Cyberbank Core. And we are seeing, along with Cyberbank Core, a whole new generation, right? What we call Generation 3.0 core banking platforms. So we really have moved from Gen 1 solutions, which are often based on mainframe technologies and technologies that often go back to the 70s and 80s and even early 90s. Gen 2, which are more of the mid-range or client-server types of technologies. And we've entered this world of Gen 3 cores, which are what we call MOP architectures, right? Microservices, APIs, cloud-native, and often headless. So that represents a whole new class of what we call neocores that have sprung up around the world, and not just here in the United States, but even in Latin America and in Europe, for example, we see a number of these. It takes a lot of guts, I would say, to enter this space. So you can literally count on two hands the number of players that are trying to do this, because rebuilding a core architecture from scratch is not something everybody has the stomach for. In terms of adoption, obviously, we saw originally the sort of digital challenger banks or banks that were launching a so-called digital sidecar or just digital-only banks in general to be the first movers, right? They didn't want to create something new based on older technologies. They wanted that technology to be future-proof for as long as they grow. I think the big shift now, and I think my PwC colleagues would concur, is now there's strong interest from traditional incumbent legacy financial banks, right? Some of these banks have been around over 200 years, who are finally now strongly interested in getting off of their 30, 40, even 50-year-old highly customized platforms. So I think that's the big catalyst that we're seeing.
Yeah, and we're working with, a lot of these banks, the big ones, the small ones, right? Folks that are not banks, but that want to be banks. I mean, Musi, share with us. I mean, you and I are working on a couple right now, as a matter of fact. But share with us kind of why we're being engaged. What are banks coming to us and saying, why now? What is it we care about?
So I think there are a couple of reasons for the why now. I think Mike alluded to some of it. The technology has leapfrogged really ahead. So thinking about what's available in terms of microservices, API-enabled, thinking about cloud-native solutions like Cyberbank Core, I think has driven a lot of that interest. But it is also, frankly, on the bank and the financial institution side, a lot of them are grappling with how to prepare for the next 10, 20, 100 years. And a lot of that does entail things like looking at not just the tech stack that's been there for a while, but also the resources, the people who've been working on those, the skills needed to move into the next generation. And then I'd say last but not least, there is a certain amount of realization that the entire ecosystem needs to evolve. And the core is, like I said, a really important part of that. But if you're changing how the payments is happening, how identity and management is happening, then this sort of follows naturally in that overall modernization that a lot of our banking clients are doing.
Yeah. We're at a point now where just the cost of a deposit, right? We've got these large banks that are capturing the lion's share of deposits, and then you've got the disruptors coming in with potentially new revenue streams that the big banks are equipped to handle. They're not ready to be able to take on some of these things like the NPL, right, with their legacy stacks. And they're not talking to each other in a lot of cases internal to the bank itself. So to be able to come up with these provocative products to give an offer to clients that are, that are new, they're should be easy, should be fast to market. They're kind of stuck on a 30-year train that's not moving as fast as some of the disruptors. So
I think, these three waves of core technologies also seem to align very nicely with what I call the three waves of digitization, right? First wave of the digital was all about digital channels, right? Self-service channels like web banking and mobile banking, but still slapped on a much older back-end set of technologies. Then we saw a wave of digitization, which was removing the three Ps, right? People, plastic, and paper. But again, not fundamentally changing the business model, just taking things that used to be tangible and physical and making them digital. This third wave is really about new business operating models, new financial products. And there's this realization that, no matter how much I invest in my web banking channel or my mobile banking channel, it's not going to give me those new experiences or whatever. You have to go to the back end. And then they're realizing, gosh, the time to market for change or the cost of change on my back end to do these new types of services and experiences is going to be astronomical. So we have to modernize the back end. And I think the banks are feeling that. Yes.
I would say what does a core modernization mean to you guys? But I think you've summed it up pretty well at the top of it's a bank modernization question first. The core happens to be the actual foundation of it, but without the bank modernization itself, the core part is going to be a really hard thing to do. Do you want to tell us a little bit from your perspective? What is it? When we talk about the bank modernization, what are the things banks should be thinking about before even saying, okay, this is our core?
Yeah, a lot of the sort of impetus for this is, as I said, the ecosystem. So thinking about what are all the piece parts that come together. And it could be, not everyone starts here, but it could be starting with looking at the overall stack of what products am I offering, who am I offering it to, what can I do today, what can't I do. So if you think about, in the traditional sense of putting your clients first, who am I targeting and what am I offering them? Those would be the two places I would start. And then based on that, thinking about what technology do I need is really the enabler. And so is it, buy now, pay later? And there are different flavors of that. And Mike could talk about that for sure. But if I know that that's something I want to offer a client and it's going to take me months, years to launch that product, would it make more sense to explore a different way to deliver that? So thinking about the client and the products is where I would start. I do think a lot of people start with the architecture and the technology stack, right? So sometimes the business isn't the ones leading, it's the tech team that's leading, and that's fine too. We see a lot of people think about our architecture modernization, and then that's where the core, obviously, as you said, is the crux of that. So we see both sides. We see sometimes the business leading, we see sometimes the tech teams leading.
The idea of we want to be a bank for everything, but you can also overwhelm yourself in terms of progress just by trying to become a bank for everything, right? Yes, the modern core provides really an avenue to capture and to implement everything, right? But Rome wasn't built in a day. Neither is a 35-year-old banking architecture. From your standpoint, what are the hardest things the banks are challenged with as they think about modernization right now? Just the very tactical.
And just to build on that comment, we do see there's a lot of older banks which have a bit of an older mindset in the terms of, that's a technology thing, so let my CIO, my CTO deal with that. And there is a business case there.
Yeah.
Total cost of ownership, total time to market are still relevant business cases, but it's on the cost side. Mm-hmm. And there is no core transformation that happens without involving business operations, right? And in my experience of rolling out cores around the globe at various banks, the business gets involved, let's say, on a year-long project, 2-year-long project, even longer sometimes. And then they still have the same set of products and the same customer experience and the same operating model. And they're like, well, what did I get out of this? So we do really encourage that the business does sponsor this. and think about, again, the segments, the distribution channels, the products that you are going to have in the future. Don't just do one-to-one replacement. Yes, you'll enjoy the cost savings, but you're not getting anything new is not a great strategy for core modernization.
What once you have in the past doesn't necessarily translate to what you exactly need in the future.
Yes.
It's the whole reason you're modernizing in the first place.
100%.
And there are ways to drive revenue in the immediate and short term. So we've seen this, right, as if you lead with a product that's going to drive something, it not only, helps the balance sheet, but it also drives excitement and enthusiasm in the organization if you have people who see this is the immediate benefit I see. It's not a 5-year program that, drives some cost savings, as you said, but doesn't deliver anything for the business. So I think there's benefits, even frankly, from organizational buy-in and enthusiasm.
And I think, there are other stakeholders within the bank, like risk, for example, and compliance. The ability to embed risk controls deeper into your technology stack, even at the core level, is also part of the business case. So I think everybody can win. Technology folks looking for lower costs, risks with stronger and more embedded risk controls, and of course the business and the end customer of the bank. So
yeah, it's a good point, but I think that comes with educating everyone and bringing everyone along for the ride. So I would say absolutely. And we can sort of see how that's more successful and the more of those teams that we bring along on the journey.
It sounds like a mountain of work, particularly now where banks, again, are hyper-focused on efficiency. What's my year-to-year budget? I have enough budget carved out for year 1, but I am subjected to change in year 2 and year 3. There's a lot of complexity, like how do I get some initial bang for my buck or initial value? Like this idea of one of my colleagues always says, how do I get a heartbeat, right? How do I demonstrate a heartbeat? That for us has been what we've seen kind of pervasive with all our banking clients is like, again, building out the strategy. What do we want to do? You can select the chassis, right? You can select the core, but think about what do I want to be able to show and bring to market quickly that's going to make, the money and the funding flow even further. I mean, can you tell us a little bit about that? Like how do you guys, how do you think about like what can be speed to market quickly, particularly with Galileo and Cyberbank?
Yeah.
How do you roll out quick? What are the things that enable you to build a heartbeat quickly as opposed to this 5-year and maybe we'll have something in year 5?
Yeah, so a modern way is to think about time to market and accelerating change and making change part of the bank's sort of mantra, right? That nothing stands still, you have to constantly innovate. So you need to have building blocks which are reusable and flexible. That's where the microservices comes in. We no longer build cores in these strict product silos. We're able to take and reuse microservices across deposits, lending, payments, etc. And really try to break down those traditional product silos. Examples earlier were given, buy now, pay later, early wage access. These are examples of how we can take the best of each deposit, lending, and payments and create something new. We also surround the solution with low-code or no-code tools. So one example of that is our product factory, right? No longer do you have to hard code your configuration parameters, which of course change out of bank to bank. And no longer in a Gen 2 situation where you have not quite coding, but you're still building these complex parameter files. So it still takes some learning and some expertise. Now you just have an electronic form on a web browser that even a non-technical person can fill out, right? What's the interest rate I want to charge for this particular loan product? What geography is this limited to? So the product factory and these other kinds of solutions help to speed that market. And of course, just putting things in the cloud, right? No longer do these large banks have a data center where they'd have to go and procure the hardware and they have to install it and integrate it and set it up. And cloud allows us that elasticity. It's really quick to spin up a storage or a compute capability and scale it as your business grows and shrinks over time. And so, even just being cloud native helps with that time to market equation. So there's a lot of ways that we work with banks and these new cores to speed all that up.
And even the ways we work with, think of the traditional mainframe silo, like we work in a very structured SDLC waterfall approach.
Yes.
In the old world and the new world of Agile.
Yes.
In the old world of mainframe and coding a 9-month, product lead time, like that doesn't work.
Yes.
Right. So you have to essentially build your organization around this concept that CyberRank, right, provides of, hey, we can build it right here, right now. Are you prepared as an organization to handle that?
And I would say it's funny you bring that up, because for almost a decade there was a trend called two-speed architecture, right? Where your front-end systems like your web banking, mobile banking, they had all adopted agile and DevOps types of methodologies. And your back-end guys who are still working on a mainframe and still using traditional waterfall. So there was this huge disconnect between the front and the back end. Two-speed architecture has been dead now for about 5 years. Nobody's recommending that anymore. And that, just having a modern back end lends itself naturally to these sort of CI/CD mindsets, right? So
It does, though, raise a good point about the need for the whole organization to come up the journey. It can't just be about a small team or one tech organization that's driving this, because so much of this is intertwined with other parts of the organization, both from a product standpoint, whether it's channels, whether it's actual offerings and products that go to market, and or other tech teams that need to be involved. And so getting everyone on the same rhythm and getting everyone on the same, I'll call it roadmap, is actually a really important part, but very doable. I mean, we've seen this happen with, and you alluded to this, John, right? The largest banks in the country, as well as down to smaller credit unions. Everyone's on this journey. Different people are at different stages of it.
I'd argue that part is the harder part than the actual platform stand-up. Yeah. I mean, I think we've sort of eaten our words on that and have been able to show, like, CyberBank as an example, we can stand that up. I mean, you don't need a year to stand that up, right? Given the right environment, you could stand that up in a matter of days and weeks. Yeah. It's everything else around it that takes the time.
I love that, because I'm an ex-banker. I used to work in technology at a bank, and we used to be the long pole in the tent, right? So there's major change programs, business, ops, tech, everybody getting on board. We were the ones that always took the longest. So, the general feeling within the bank was, well, let's see what technology has to say to determine the real duration of this project. That's no longer the case. Technology is now the short pole in the tent, and we're relying on this change and other things. And by the way, that's a great reason why we partner with people like PWC. We're hyper-focused on building the best product. We're hyper-focused on running it as a service. We're hyper-focused on configuring it, extending it, parameterizing it for our client. But, there's so much more to these change programs. Building the business case, creating the new business operating model, program governance, like the list goes on and on of, why banks, often work in tandem together, right, to make these things happen.
Part of the benefit of implementing a core, such as CyberBank, right, is you now have the opportunity to say, the world is possible, but I don't know what we're going to need in 5 to 7 to 10 years. But our platform is not going to be obsolete for that.
Yes.
You've enabled the ability to, I'd say, plug in and unplug new technologies, new services. Again, I'd say within days, a bit pedantic, but it's really within days and weeks, as long as the business is able to drive and communicate it and articulate well with the technology teams themselves. So.
I don't like to say eating our own dog food, but so I'll use the word drinking our own champagne. When we took CyberBank and put it in our accelerator, it didn't take months. It didn't take a BRD to be written and then handed over. None of that, right? We were able to get our product teams to look at what the Galileo team has built and get it up and running, ready to be used. And we can certainly talk through that, but I think showing that demo has opened a lot of people's eyes to not only is it possible, but then what are the actual opportunities with that? How can I create, BNPL offerings? How can I create relationship-based pricing or bundling? I mean, the eye is wide.
We're spending more time on that
Yes.
than we are okay, did the platform get set up? No, the platform's up. Now we actually get to tinker with.
What the world is your oyster kind of, right? You can create any sort of bundles and products. Yeah. So thank you.
Yeah. I also want to touch on, moving towards a SaaS model. We've been discussing a lot about future-proofing the bank for the future, so they don't have to keep every 10 years keep going onto this thing. Moving to a SaaS model kind of abstracts out a lot of that responsibility from the bank and to the SaaS provider. We can work behind the scenes for continuous modernization, and as long as the touch points into, in our case, Galileo, right, your APIs, as long as those are well defined and the bank can plug into that easily, they don't necessarily care, that we're moving from Java to Go, or we're moving from Oracle database to Postgres, or we're modernizing in all these ways behind the scene, and they're just going to keep enjoying those benefits of modernization. So take a lot of the future proofing and put it to your SaaS provider as a recommendation.
Which is interesting because I think even a decade ago, 5 years ago, people were nervous about having everything be with a SaaS provider. But I think advances in sort of the digital banking channel space and CRM and other industries, other micro industries, has actually helped. And I think now people are much more comfortable saying, you guys figure out what database is best suited for the scale ID.
Yeah.
So I think that's been really beneficial.
Yeah, banks got their feet wet in SaaS starting a long time ago, actually, in non-mission critical areas like HR, for example. Like, why do we have our recruitment system if we can give it to, Taleo or one of those guys? And so they started to realize the power of the cloud and of SaaS. And now it's really starting to enter that mission critical space like core. Much faster than I personally ever thought in a lifetime. Yeah.
And it's necessity for the banks to be open to exploring it, right? A lot of the banks are still thinking, well, I've got a massive technology team, we'll do it ourselves. And it's like, well, you have a massive technology team to manage your existing.
Right.
To manage the new, you can actually do this in parallel and with an easy team. Like, you don't need a massive technology team spun up to now have as either a side core or as a parallel product platform to use Cyberbank. You actually can work in a smaller team, use it, experiment with it, build it until everybody's ready to use the new core as their go-to. So you bring up a good point, and that's kind of the crux too of our here, right? So we've obviously been partnered for a while. We've worked together for a number of years. There's a lot of things that we have partnered really well on and have been able to kind of share knowledge on. Like an example would be, you mentioned before, but our risk and compliance, right? The Gen 3 core is not something that would be known as the greatest thing since canned beer or since reg compliance, and yet you guys have spent quite a bit of time we have together, right, to make it regulatory compliant. What are some other things that do you want to highlight that we've done to kind of bring this to market, and why PWC and Galileo?
Yeah, so obviously PWC is a partner, but we've also utilized the broader services at PWC above and beyond just the digital banking team. When we made the decision to enter the U.S. market, we're big believers that we have to localize for our key markets. We don't want to just provide a framework or a platform and then put all the responsibility on the bank or the bank system integration partners to do the last mile. So we are heavily investing in localizing for key markets like the U.S. That began with initially, part of localization, of course, is regulatory compliance. That initially began with working with PwC's risk and regulatory team to help us map out that. And then as we built an internal product compliance team, they were able to leverage that initial study that PwC did for us. And we continue to interact with that team on an as-needed basis because, as you all know, regulations aren't static. They continue to evolve, and we need to monitor the change and understand the impact to us. But the other thing is that, moving core into that SaaS model, we actually become an extension, an auditable entity of a bank now that we're hosting and running and operating it on behalf of the bank. And so we have other people in our compliance department that help us understand what does that look like, because that's not your traditional alphabet soup of regulations. That's more of your FFIEC, IT type of stuff when you become an operator, right? And so we've really been able to get ready for the U.S. and our other key markets, in that way to truly make it localized for that. Also, we're integrating, by the way, with our payments hub and our card issuing and processing capabilities because, as you guys know, every country has different payment rails that we have to think of. So localization is a big topic. The biggest topic within that is regulatory compliance, and PwC's been a great partner for that.
But even so we, again, we hear the term like systems integrator, and is PwC a systems integrator? And the answer is, well, yes, and there's a lot more, right? And we just finished talking about, the business imperative, right, that's associated with this. From a systems integration perspective, part of what we do has helped to demonstrate, Galileo being a really strong fintech still looks for, folks like PwC to help demonstrate how easy it is to stand this up, but then what are you going to do with it when you stand it up? So do you want to talk a little bit about, number one, how easy it is to stand it up, And then number two, what do we do around the core modernization? Why we call the bank modernization with core?
Sure. So I'll start with the second part first, because as we've talked about so much of the modernization journey is about all the piece parts around any of the systems, whether it's Cyberbank or anything else. So first, thinking about what is the strategy, who are we going after, is it products, the clients, the channels, et cetera, and having a clear strategy for that. And then being able to articulate that into a business case, into a roadmap, things like that. I think that's a place where we get called on a lot. Even things like, okay, we're implementing Cyberbank Core. Can we help be product owners, BAs? What are the arms and legs that we can offer, but also the thinking? So what product offering are we going to go to market with Cyberbank Core in there now? What's the new thing that's going to be? And I think the product management muscle is an important one to bring to the table. People often think of system integrators as just sort of the fingers on keyboard. Yes, we can do that, but to your point, it's yes and. So I think there's the right compliance piece, there's the sort of strategy, business case, the value prop, if you will. But then there's also the actual BAs and the product owners and the teams that are going to actually be with you, whether you're a bank, a fintech, a credit union, for the journey, to be sort of the partner arm in arm. So I could go on. I think to your other point about how can we showcase it, I always say it's better to show than to tell. So perhaps I would suggest that sort of seeing a demo of what we've been able to build in our accelerator in our environment has shown a lot of banks, wow, the power of Cyberbank Core is getting it up and running, getting a heartbeat up and running is super easy, but then what are the things that we can build with it? So I think I recommend that folks see it and they can see it come to life, and that actually makes it very compelling.
Seamless integration with a front end, any front end, right? Seamless integration with new product and pricing hubs, integration with money movement channels, payments hubs. Like, that's what makes Cyberbank really cool. And it's something that, like I said, and Lucy was saying, right, we can show those integrations in a fast basis. And again, for our banking clients, it helps them to demonstrate, hey, we can actually do this and we can bring speed to market, maybe better than what the banks are thinking their traditional technology and product teams can do.
Open it up for questions.
Yeah. Any questions?
Is there like a particular segment of the banking market that is moving towards Gen 3 cores at a quicker pace than the others?
I would say retail and SMB space tends to be the first movers due to the simplicity of their needs and the entity itself, right? An individual or a small business. Most small businesses, for example, in America are sole proprietor, no employees. And so there's a lot of synergies there. And often banks put these two areas together. We will see modernization as we move up to mid-market commercial and eventually large corporates. We're already seeing some, not that it's a Galileo thing, but some interesting things happening in the syndicated lending space with a new provider that's come on the scene. But I think you're going to see them be a fast follower rather than a leader. So most of it will be consumer and SMB first, based on what I've seen.
The challenges we see too, adding on to that is, it's retail, it's SMB, but it's also inter-product, getting them to, some of our larger banks to think, hey, it's not just a lending product, it's not just a deposits. How do we integrate? But also, how do we integrate our teams to think about the offering as one giant customer-specific offering versus a product tier, a product tier, and a product tier, a product tier?
Other questions? And I think they alluded, for those of you who want to see in action, there is, at the end of this, feel free to wander over there. We've got a couple of PWC guys who are going to show the industry cloud, of which Cyberbank Core is embedded in that, and can show you some of the power of that if you want to see it in action.
Are most of your implementations with larger banks, or are you also working with fintechs and sponsor banks?
Yeah, so Galileo, we do target 3 distinct segments. The first are the so-called digital challengers, which are, as you know, mobile-first technology companies that work with a partner bank in the background, but the experience for the consumer is a banking experience. The second are the larger, are the traditional financial institutions. So banks and credit unions and consumer finance companies who do our chartered license. And then our third segment is this non-financial brands who are taking advantage of the embedded finance phenomenon. So those are our three segments. The way the core evolved, it actually got its start in Latin America. And this was our pre-SaaS journey. So you will see larger banks who have the ability to manage their own environment, deploying Cyberbank Core in Latin American countries. And then about 3-4 years ago, we started coming into the North American market and then moving into a SaaS model. So you will see the most legacy deployments are larger, more traditional banks, but now expanding beyond that to these other two segments and in the SaaS model. Yeah. And just so you guys are aware, we also have other offerings beyond core. So they might start with us, for example, with our digital platform first, and then move to core secondarily, or they might start with payments first and move to core. So it just, every bank is a different journey in how they work with Galileo, and we keep growing in terms of our offerings and as well. So there's different ways to get started with us. It doesn't always have to start with the core product.
Are there any operational efficiencies that banks will get with Gen 3 cores, because that happens to be slow down with a lot of banks with all these integrations and files coming in, loading this and manual reports and all that?
I think the days of the day two process of I print out my report, I line by line go through sitting in operations will be long gone as more and more folks move to cores like Cyberbank Core, right? The idea that everything is batch-based and therefore creates a whole second day or sometimes third, et cetera, process, I think just fundamentally are different in this new world. And so we see tons of operational efficiency there, but that's just core ops. I would say similarly, the efficiencies that come on the risk and compliance side, if you can bake in a lot of the controls into the processes, into the applications, into the system, you don't need an army of folks doing day two control work.
Yeah, you'll find in a lot of traditional banks, as their channels move to real time and slowly as payments move to real time, they actually built a layer on top of their core, just what we call a memo post environment. Basically, they're mimicking a real time environment, but it creates, to your point, a lot of operational inefficiency of syncing the core with this new front end layer, and also a lot of additional costs and a lot of more points of failure. With modern Gen 3 cores, you can collapse all that down into a single, that can be both system of record and your real-time processing, because the real-time nature is only going to increase. But we still live in a world where half the bank is batch and half the bank is real-time, but you're going to continue to see that shift over time.
Interestingly, a lot of what we are talking about with some of the bigger, older banks, right, is call it the workforce that is probably close to retirement that have managed and maintained this heavily customized, heavily configured environment.
Undocumented.
Yeah, undocumented, right?
And all in Joe's head. So.
Yep. And a lot of this as well streamlines that, makes it a lot easier to manage and maintain for not just for a couple of years, but for the foreseeable futures.
Yeah.
Did you have a question?
Yeah, hi. Hi, it's Leslie here, founder of a fintech startup. So we just partnered with PWC in Luxembourg.
Oh.
We've just onboarded, signed a JV on all of that done. But PWC Luxembourg doesn't have this kind of tech solution. They do management consulting, government advisory and stuff. So we start to talk to banks as in jointly offer our product to the banks. I mean, so you are like a technology enabler, I would imagine.
Yeah, we build the software, we run the software as a service. We also have a BPO that surrounds it. But we partner with them for a number of PWC services, ranging from management or strategy consultancy, program governance, system integration. There's a whole sort of laundry list of things that they do. So yeah, it might vary. You guys can talk more than I can. It might vary. The services they can provide might vary from country to country. But one of the reasons we work with them is because they can do so much. So we can focus on software and building the best product. and they can tackle some of the other things like helping build the business case.
Right, right. I mean, we don't have a presence in the U.S. We're starting to talk to like banks in the U.S. and then there's a lot of interest there. But now I'm wondering that how the partnership could work to join the offer.
I'll say we're a firm of firms. That's something that actually this year I felt like it's been even more heightened from our standpoint of, we collaborate with our member firms throughout the globe, doing, I'd say, an even enhanced surge on sharing capabilities, accelerators, something like this, right? How would it play in Thailand or New Zealand or Australia or Luxembourg, right? Like these are the things that we are talking about here. They're scalable to any other given country. It's just a matter of making sure that we're in contact with the right people as well. So happy to talk outside of this.